produce the t-shirts. Whereas the royalty is you need to pay even before you commence production. So that's one way of looking at it. Okay. The second point is royalties tend to be linked to the productive output. So for example, you might be making payments with respect to your turnover. Okay. So the higher the turnover, the higher the royalty. Okay. Whereas the rental tends to be based on other factors like the cost. So if a person is leasing out an equipment, the person may say, okay, how much did it cost me to buy this? What should be my rate of return on that? Should it be 5% or 10% rate of return? And then I determine my rental based on that. Okay. Whereas my rate of return computation for intangible property would be very different because sometimes you can't quantify it. So normally, they might base on a percentage of turnover, for example. Okay. Then you look at royalty normally looks at intangible properties, whereas rental is looking at tangible properties. Okay. Because if you look at our Income Tax Act, the definition, when they say, withholding tax is applicable, and under Section 12, all they say is that royalties for the payment for the use of, they use the word movable properties, okay, and they also use the same word movable properties for rental, okay. So as far as the Income Tax Act is concerned, the word movable properties is used both for rental as well as for royalty, okay, but they don't define it, okay. So then we need to kind of go through some of this exercise, and the movable property itself can either be intangible or tangible. Okay, so when normally it's intangible, okay, it tends to connote royalty, and when it's tangible, it is rental. Okay. Now, to make it even more complicated, you look at tax treaties, right? Okay, even tangible properties are treated as royalties in some tax treaties. Okay, so that's where it becomes a little bit more interesting because you might be making a payment which is rental, okay, rental payment to a non-resident, and then you say, okay, under domestic law I withhold tax 15%. Okay, then you look at tax treaty. Okay, look at tax treaty. Okay, there's nothing that talks about rental. Okay, so then you say, okay, since I can't use treaty, I withhold like 15%. But if you look at the royalty clause in the tax treaty, sometimes it might include tangible property. Okay, for example, equipments might be covered under royalty. And if the royalty rate under the treaty is say 10%, then you can actually apply 10% instead of domestic 15%. Okay, so therefore it's kind of worthwhile to do that kind of analysis. To look at the royalty clause in the tax treaties as well. Okay. Now, not all situations are straightforward. Okay. If you would ask me, what would be an easy working definition, then I would say, in order for you to consider something as royalty, there must be an intangible property in place, right? It must have been created and it must have been licensed out, so you are obtaining something for the right to use. Then it becomes a royalty payment. Okay. And one of the things to note is that the frequency of payment does not really mean anything. It's like if you say, okay, I pay monthly, so it should be royalty. Not necessarily. Even if you pay in one lump sum, just one payment, okay, but as long as it is for the use of an intangible property, that would be a royalty. Okay. So in a situation where you have that issue when it's not clear cut whether it's royalty or rental, then definitely this can be clarified with Inland Revenue, okay, in writing. Okay. Now let's look at royalty versus technical fee. Okay. Again, why is this important? When we look at Section 45, which says that income that is deemed to be derived under Section 12(7)(b) is subject to withholding tax, then we look at Section 12(7)(b) and say what is the type of income that falls under that? So 12.7b basically says any income that be deemed to derive from Singapore for any payment for the use of or the right to use scientific, technical, industrial or commercial knowledge. So that's the first part, right? For right to use. Then the second part it says, or for the rendering of assistance or service in connection with the application of or use of such knowledge or information. So if effectively you can split 12.7b into two. The first part is the right to use the information. The second part is rendering of service in the use of that information. So there is that difference. And because of that difference, you find that the withholding tax rate also differs. The first part, which is payment for the use or the right to use information, is a royalty, and therefore 10% withholding tax applies. The second part, which is rendering of assistance or service, is not a royalty, and therefore you can't apply 10% on that. Okay? And the other distinction is that there's a particular concession, and this is now under our Income Tax Act with effect from 29 December 2009, is that when we're talking about services, technical services, if they are rendered outside Singapore, okay, by a person outside Singapore, and that person outside Singapore does not do business here, is not incorporated in Singapore, does not have a P in Singapore, then you don't have to withhold tax on that payment. Okay? Now this is only applicable to technical fee. If it is a royalty, you can't apply this. Okay? It doesn't matter where you use the trademark. You can use a trademark in Singapore, outside Singapore, it doesn't matter. The only thing is that if you are making a payment, a Singapore company is making a payment to a non-resident, then royalty is subject to withholding tax. So again, there's this difference. Okay. Okay, so this summarizes the differences. 10% rate for royalties, and then we have a 17% tax rate for technical service fee. Okay, and for services rendered outside Singapore, it can be exempted, but you can't apply the same exemption to royalties. Okay, there are certain types of royalties which are exempted from tax. I've given just a few examples. Okay, so if I say these are royalty payments, then they are exempted. Okay, but you can't apply the same type of exemption if it's a service. Okay, and under tax treaties, different rates may apply. Okay, so for example, if you look at Singapore-Malaysia tax treaty, there is a 5% tax rate for technical services. Okay, which would be lower than the royalty rate, which I think is 10%. Okay, so therefore, because again there are different rates in tax treaties, the characterization becomes important. Is it a royalty or is it a service? Okay. So let's go through some issues. If I pose some questions, provision of technical training. Okay, is that service or know-how? Because there is a component of know-how. As I showed in the earlier definition, right to use knowledge, right to use know-how is a royalty. Okay. So the question is it a service or know-how? Okay. Then we look at franchise agreements. Okay. If you're making payments to a non-resident, because you have obtained a franchise, is that a royalty or services? Then the third question, if you get an opinion from a consultant. So the consultant is giving an opinion, and that is a know-how, right? It's a knowledge. So are you getting something, you're paying for right to use that knowledge, and therefore is that a royalty? Okay. Then let's look at the fourth one, where say your company pays a recording artist, okay, to come up with a song that will be used in your marketing campaign. So when you make the payment of 20,000 for the person to sing the song, is that a service or are you paying for royalty? Okay. Now I'll come to each of these, but before that, the key point here is that when you look at supply of know-how, okay, normally there is very little effort required. So if I have created, say for example, a secret manual, okay, of all the information that's required for a particular business, and I want to license this out to people, there's little effort required on my part because I can license out to 100 companies without me actually doing nothing. Okay, what I've done is I've spent a lot of time creating that, but once I've created, I don't really need to spend time in earning that income. Okay, whereas a service is different. Service is I need to spend time, effort, energy, and incur costs in providing that service, right? So service will require effort, will require time, whereas supply of know-how, normally there's not much effort in supplying that. So that's the first point. The second point is, in a contract for service, when a service is being rendered, the individual is using his own skills, his own expertise, his own knowledge to provide that service, okay? But the individual is not licensing his knowledge to the other person. Okay, he's not taking out the knowledge and say, okay, now you have the right to use it. Okay, so service is more in terms of applying the individual skills to a particular task in providing that service. Okay. Another way of looking at it is that in order for it to be a royalty, there must be an intangible existing in the first place. Okay, so if I were to pay, say, an R&D company, okay, and I say, can you develop for me a prototype? Okay. So I'm making a payment, and the R&D company is coming up with a prototype, okay, and once the prototype is complete, okay, then that might be patented, for example. Okay. So the initial stage, when I'm making the payment for them to come up with a prototype, there's no patent at that point in time. So then it can't be a royalty. It has to be a payment for service, for them to undertake that service to develop the prototype. But once they have done it, and they patent it and say they have the right to it, and then you pay for the right to use it, then it becomes a royalty, because the intangible now exists. Okay, so that would be one of the distinctions. So going back, we look at each of these. Provision of technical training, okay, that will be a service, okay, because the trainer spends time and effort in imparting his knowledge, but he's not providing a license to use his brains in that sense. Okay, so it's a service. If you look at franchise agreements, it generally tends to be a mix of both. There's a royalty component because you have the license to use the trademark, for example, to use the logo and so on. Okay, but at the same time, the non-resident may also provide services. Okay, the service could be in terms of training your staff. It could be providing marketing support. Okay, it could be providing knowledge about the market. Okay, or it could be teaching the company as to how to display the product. So all those would be service. So in a franchise arrangement, normally it's best to actually split the royalty component and the service component, because if the services are rendered outside Singapore, it's exempted from tax. Okay, but if it is rendered in Singapore, the rate is 17%, whereas the royalty rate is 10%. So from a compliance perspective, again, it's important to split the two and account for it appropriately. Okay. Then we look at the last item. Okay. Again, here the payment of 20,000 is made for the artist to record. The question is, when the artist is singing, is there an intangible? It's not, because the intangible only comes into existence after the song is recorded and the artist has a copyright to that song. Okay. So if you're just paying for the artist to sing, then that is a service. But once the artist has recorded the song and there's a copyright, and the artist say, okay, now for you to use it in your commercials for 3 years or 5 years, you need to pay me every year a certain amount, then that becomes a royalty. Okay. Now Now let's look at a few more examples. Okay. Now if you are paying for web hosting services, okay. Now there is a know-how in embedded there, but at the end of the day, it is still a service. Okay, you're not paying for the right to use a know-how. Okay, you're just paying for a service for them to host, and therefore that is considered as a service. And withholding tax only applies if the services are rendered in Singapore. Okay, if it's provided outside Singapore, there's no withholding tax. Now let's contrast that with leasing of a server. If you lease a server, that is not a royalty. Okay, that is a rental. Okay, and it's not a service as well. Okay, so sometimes what happens is that when you have a contract, your web hosting and leasing of server is packaged together. Now that's where the problem arises, because rental portion, you have withholding tax. It doesn't matter where the server is located. Okay, server can be in Singapore, outside Singapore. The main question is, are you paying rental for to a non-resident? Okay. Whereas for web hosting, you have to ask the question, where is the services rendered? Okay. So when you have this kind of mixed contracts, again, there's a necessity to split it from a compliance perspective as well as from a planning perspective. Okay. Then we look at, say, payment for end-user subscriptions to Bloomberg, for example. Okay. If a company needs those kind of data, if you look at traders, they need all the stock market information, and you're paying those kind of for those kind of data. Then is that a service, or is that a royalty? Okay. Now, here, the payment is for data. Okay. Now, if that data is copyrighted information, which Bloomberg is making available to you, then that becomes a royalty. Okay, it's a royalty. Because they can license to hundreds of people that same data without providing any further services, actually. They don't have to do anything, So that becomes a royalty, okay. But thankfully, we do have exemptions for that under our domestic law. So if you are making payments for subscriptions to Bloomberg and so on, it's currently exempted from withholding tax. So although withholding tax applies, but by concession is exempted. Okay. Then let's look at payment for like downloadable ringtones, music videos, and so on, into your computer. Okay. Handphones. Again, there's really no service rendered. What you're actually getting is a right to use that music, right to use that ringtone. Okay, so it's a right to use. So again, that is a royalty and not a service. Okay. Again, thankfully, there's no withholding tax currently by concession. But as all of us, every time we download something in the handphone, we have to be paying. Okay. So currently, there's a concession given for that. Okay. Now let's look at the last one. Now cloud computing is becoming more and more popular. Okay. So you might not actually be downloading the software. Okay. You're just paying to the service provider to use that software which is on the cloud, right? And I think this is going to be the trend, going forward, where even like Google, now coming up with their own cloud laptop, where when you open, there's actually no operating system. The computer will link with, the server, and you run all applications on the cloud. Okay. So that's where we are moving towards. Then the question is, when you make a payment, is that a royalty because there's software involved? Okay. Is it a rental? Okay. Because you're not really downloading the software. Okay. You're paying like a rental. It's a user subscription. Right? Or is it a service? Because it's all going to make a difference, on what rate that you apply. Okay. So the answer to that is, it's actually currently considered by Inland Revenue as a service. Okay. So therefore, if you're making payments for cloud computing, okay, to a non-resident, if the services are rendered outside, that means where the applications are running is all outside Singapore, then there's no withholding tax. Okay. But if the applications are running in a server in Singapore, and you're making a payment to a non-resident in respect of that, then there is withholding tax. Okay. So as you can see, it becomes very important to look at every transaction and to determine, what is it? What is the character of this? Is it rental? Is it royalty? Is it service? And then, so that's the first part. Then you have to decide: are you making a payment to a non-resident? Okay. Then you have to have other questions like: is it services rented outside or inside Singapore? Then you determine the tax rate. Then you have to see whether is there a treaty. So there are many processes, okay, involved. Now let's look at another situation, okay, where you say your company is hiring someone for a short project in Singapore, a very short project. Now the question is the person coming to Singapore to work for you as a employee, is he your employee, or is he a subcontractor, that means independent, okay? And that also will have implications. If you look at the compliance requirements, if the person comes in as an independent contractor, is what I call a non-resident professional, that means not your employee, okay, then the company's compliance requirement is to withhold tax, okay? It will withhold tax either at 15% on gross or 20% on net. Net means after setting off all the expenses, okay? But if the person comes in as an employee, then there's no withholding tax, because under Section 45, salaries of employees are not included. It doesn't come under Section 45, so there's no withholding tax. But what you need to do is file IR8A or file IR21 when that individual leaves Singapore. Okay, so the requirements will be totally different from a compliance perspective. Okay, and there's also planning opportunities. See, if you hire someone as an employee on a short-term project, and if the employee stays in Singapore for less than 60 days, under domestic law, there is no tax. It's exempted from tax. But if you hire that person as an independent professional, okay, then there's withholding tax even if the person is in Singapore for 1 day. Okay, so because of that difference, again, the company needs to decide: are you, having the proper compliance? Okay, and from a planning perspective, you can also determine, do you want the person to come in as an employee or as an independent professional? Okay. Okay. So here's just to illustrate, who are considered as non-resident professionals. It's kind of wide, it covers, besides the usual suspects, like accountants and so on, but even if you're getting trainers, coaches or experts, okay, so sometimes, companies, depending on the business, for example, you might be selling wine and you might have a yearly exhibition where there's a wine tasting competition, and then you have these judges that you fly in who are experts in wine. Now they are also considered as non-resident professionals. Okay. So it covers quite a wide group. So again, should they come in as your short-term employees or should they come in as professionals? It all depends again on the, on the tax effect. And sometimes you can actually work it out to see which is better for them. Okay. Like for example, when they are treated as a non-resident professional, and they are taxed on a 20% of net income, then airfare and accommodation are exempted from tax for non-resident professionals. So there could be some situations where you are actually bringing in a foreign expert and all you are doing is paying accommodation and their airfare and that's it, and you're not paying anything else, then you can just treat them as a non-resident professional because it's just so tedious to go through the employment pass process to get a pass just for a few days. Okay, so just a non-resident professional, and if you're taxed on a 20% basis, then airfare and accommodation is exempted. Effectively, they don't pay any tax in Singapore. Okay. Okay, now moving on, let's look at management fee. Okay, now I know I'm kind of running out of time, but I'm going to kind of cover this as quickly as possible. I'm using management fee to illustrate the point